Let me hit you what just happened that most American investors completely miss. China just told its airlines to cancel all new Boeing deliverables. Not delay them, not negotiate, just cancel them. Go ahead, cancel all of them. And they also suspended all US-made aircraft parts. Why? As you know, Trump slapped a 145% tariff on Chinese goods. Well, China responded with a FU and a 125% hit to all our American imports. But here's what CNN and MSNBC won't tell you. This isn't about jets, it's about leverage. And you're not holding the more powerful hand. I'm going to unpack this for you in the next few minutes. China was once Beijing's fastest growing market. Now it's freezing deliverables and pivoting to Airbus, their competitor, which owns the comic C919. That's a problem because Boeing used to rely on China for nearly a quarter of all deliverables. That's gone overnight. Look at the American jobs. And this didn't just happen in a vacuum. At the same point, the US dollar is collapsing against the euro, now down to 88 cents. I have a home in Germany. I see the currency exchange. Let's look at debt. The US needs to roll over $6 trillion in the next 30 days. That's part of a $9 trillion wall of debt due this year in 2025. But guess what? Also what's going on? China's controlling the rare earths, which supply 80% of your mobile device maybe, or maybe 50% of your antibiotics. You tell me who's vulnerable. Here's one more point. China only exports 14% of their goods to the US. That means that even if the US goes to a full trade war, we barely scratched Beijing. But if you're sitting in the middle of America with a portfolio full of tech stocks, bonds, and blue chips, you're not diversified. You're financially dangerously overexposed to a system that's breaking. Let's zoom out. Every empire that collapses for the same reasons: debt, war, and delusion. The US has all three. We're borrowing like mad. While inflating this currency, we're threatening major trade partners while depending on them for manufacturing. And worst of all, we've convinced ourselves we're invincible. But Wall Street knows the truth. You think the pros are buying the S&P at these inflated prices? Of course not. They're moving money into emerging markets like emerging Asia, defensive sectors, non-dollar denominated assets. Here's what smart capital is doing. They're buying China tech at 2018 valuations. They're allocating to Asia-based crypto infrastructure that's years ahead of US regulation. They're positioning in regional ETFs that's actually benefiting from the West inflation spiral. They're hedging silently because the last thing they want is for you to panic. Now, I know what you're thinking. Isn't investing in China unpatriotic? What if they seize my assets? I don't know enough about these markets. Let me be upfront with you. You don't have to bet everything on communist China. But if betting nothing at this point has become the bigger risk, you think you're being loyal to your country by avoiding foreign markets. But the truth, the politicians you vote for are already day trading with insider info. While you're waiting for permission like a big dummy, they're building wealth abroad. And what about the fear that the commies will steal your money? 2 points. Number one, Hong Kong's legal infrastructure still has Western DNA. Most institutional investors are already operating there. Number two, you're not investing in the Chinese Communist Party. You're investing in undervalued companies with growing regional demand, global tech partnerships, and government incentives to grow. It's not about picking sides. Get that out of your head. I'm a patriotic American. It's about not getting wiped out if one side collapses. I've been doing business with the Chinese since 2021, and I can tell you, most Americans, Republican and conservative, are 5-10 years behind this curve. So here's a taste of what you'll get in my free Asian market report, by the way, which is the links in the profile. I'll give you 3 Chinese tech companies that outperformed US peers in AI, but are trading at about half the PE ratio, and the exact sectors where Chinese government spending is surging while US spending is getting slashed. Also with a low-key hedge fund billionaire said about investing in China. Now, this is not surface level stuff. My community has built for traders, investors, and high IQ patriots who want to hedge smart, not panic dumb. I'm not saying the US is done, finished, finito, but I am saying hope is not a hedge. If you lost half your portfolio in 2022, you're seeing the Fed print your savings into oblivion. If you're a man in his 40s like me, who worked hard, played by the rules, feels like the rug is getting pulled, my report is for you. Because the worst thing you can do right now is to do nothing and stay still, like a little duck. Nobody's coming to save you. No politician, no banker, no CNBC guru, AOC, Trump, no one. Only you can position and reap your capital in a way before this music stops. Get the free Asian market report I got. The link is in my profile, and I'll break down everything with ideas of what to get, what to avoid, how to get exposure to Asian markets without needing to learn Mandarin or move to Shanghai. This isn't a bet on China. It's a hedge against collapse. Because if the US loses the financial Super Bowl and your money is 100% in America, you're not diversified, you're trapped. Click the profile, grab my report, and start protecting yours before the next domino falls.